Good evening. This is Ken Long from Tortoise Capital with a daily debriefing from the trading plan from February 1st, 2016. We're going to look at 4 case studies and a quick look at the market for tomorrow. So this is a 1-minute charts on XIV, the inverse volatility. And we're going to play a standard pattern for lazy W with an RLXD where the regression line crosses the dragon. What I liked about this setup is that it's got this is the dragon, it's got a low, a lower low, a lower low, and now it's made a higher low. And you can see that the RL10, the blue line, is resting right on this yellow line or the orange line, which is the VWAP, volume weighted average price. It's also linked up with the RL270, the long-term fair value. The dragon has a higher low. The RL10 crosses the dragon in the river, and that's our signal to buy. I'm using a 30-cent position sizing stop, which means that if I were to see price go 30 cents below that entry down here around 47, we would be out for a full R. But I'm using this red line at the edge of the river as my execution stop, so we've already capped this at a half R loss if that's going to happen, because this is where I want to stop in reverse. We've got at least targets of this heavy volume price level at the open. There was a slight gap down and sold off, so we're looking to at least get back to 2004, which it eventually does pretty quickly. So we get our entry with our tight stop. We start managing that stop according to this red line as it progresses forward. We're a little over an R in hand. I like this posture right here, so I get a second position, and that's quicker than I normally do. That's not 2R in hand, but I've got a pretty tight stop on this, as you can see. And what I'm playing for is the possibility that it breaks through this price level and then really takes off. The range stat move in XIV intraday right now is $2, meaning that the maximum reasonable intraday move is a $2 move from the low to the high. So if the low is at 1956, a $2 move up means that XIV can get to 2156 intraday without it being an abnormal move. So I feel like if I'm getting my second position in here at 2005, I now have another $1.50 available on 2 positions, and I've got money in hand and I'm risking markets money. So I'm postured here for the potential of a big win. Now, we didn't get it. We were closing in towards the lunch hour. We get a 1, 2, 3 exit. The RL, the 10-period regression line crosses a dragon. I get out here. It finds support at the south side of the floodplain here. The dragon never even leaves the river. It reverses. We get a 1, 2, 3 reversal move. The RL10 recrosses the dragon again. I look at a low, a higher low, so this is a re-entry on an RLXD. Yeah, it's only 6 minutes later, but the truth changed in 6 minutes. It failed to fail here. The purpose of this stop is to protect 2 positions from coming all the way back to the VWAP or the RL270, which is an absolutely normal, not unusual, expected kind of a move. So what we've done is we've given up this much of our gain to protect against a move of twice that magnitude. So that's our 2-to-1 risk aversion by using that stop. And because I'd gotten that second position in early, I was mindful to not give back this hard-earned 1R gain right here. So we get the second the second trade frame, and then off we go. That's this trade. It mucks around and then really into the lunch hour gives me 1, 2, 3 without getting any more push higher. The dragon has started to roll over. I get an RLXD exit here, and this nets out to about 1.5 R for that combination series trade. Later in the afternoon, after lunch, we get a sell-off in here. I didn't participate in that because I had a long side bias, and so I was unable to find myself getting into the inverse, which would be VXX. So that's just a trade I was not prepared for. I need 4 things to make a trade: time, will, pattern, and money. I had the time, I had patterns, I had money, but I didn't have the will to be in the mindset to trading this to the downside. So we just let that go. Just One more example of a trade opportunity that I missed. Fortunately, the river doesn't remember all the gifts that it gave you that you didn't take. So we get almost a reset of the morning trade where there's a sell-off. There's the first push back to the far side of the floodplain. That's a 4 signal move. 1, 2, 3, 4. From Z minus 2 to Z plus 2. Pulls back to the Bollinger Band mean. The dragon makes a higher low. This is the same entry as the morning. RLXD on a pattern 4 RLCO. We're in. We cash the RLXD. We find support at the edge of the river. RL crosses the dragon. We're in. Makes a move to Z2. I exit when the RLXD occurs. This was not a very good exit in my view. That's about a C exit. I gave back more than I wanted to. Find support. I get my next RLXD here. It gets out to Z plus 2, almost to Z3. Again, I gave back a little bit too much. These are C exits. I'm getting paid, but I'm giving back a little bit too much. I take the RLXD again. I'm long. This time it does not come back through the dragon until it gets all the way up here. That's about 0.8 of an R. This whole series with not especially good exits, but I think reasonable entries, and still positive expectancy. Don't like losing the money in there. I can do better, so maybe I just got to work on improving my intraday exit. But this whole second series is now 1.1 R. The first series was about 1.5, so we're looking at about 2.5 R. And that's net of commissions. I want to share with you a couple case studies from Charles, who's working hard. Here he's got a series on an intraday on Bank of America that nets out to 1.37 R. He's working these trades in the middle here. You can see the trade log, and he's documenting his rationale for making these decisions. He notices the RL, the regression lines are all inside the river. We have a sideways quiet channel. The Z3 lines have pinched inside the frog box. He takes the Z3 pinch breakout, the Z3PO entry. He cashes this one. The river reentry cashes and then re-enters once more, and then he gets that long nice pull up to exit at 10, which is a multi-bar trailing stop, the 1, 2, 3 exit. You might wait till this point, but I don't dislike that exit at all. It gets the same exits over here with less risk. So very well done, 1.37 R. This is the same afternoon, his series in AXP. This now nets out at 1 2/3 R. Same thing. A little more trending during the morning session. We get the Z3 pinch here, the red lines have pinched inside a frog box. It gets the Z3 pinch breakout. Re-enters here, cashes. It's basically the same trade in AXP as it was in Bank of America, and that's 1.67. So coming in around, that's about 3 R for the afternoon work. Well done, Charles. Good job. Now, just taking a look at the trade ahead. So we're just going to look at the summary, the Dow and ETF tactical, and a quick look at the auto framer and the RLFF. So we're still bear volatile. We're in the middle of the annual trading range. We overbought on a 10-day basis. The market condition is red bearish on both the 200-day moving average stretch and the 50-day slope, 50-day moving average slope. The risk Z has been making lower lows, but we're in an uptick here, and much like MACD histogram, that tells us to be cautiously optimistic for intraday moves that may grow into swing trades with markets money. We've got a couple signals here for the overreaction short side on the large index ETFs. What I will do is play those short if and only if it breaks down below yesterday's low or is making a series of intraday lows during the day, and that way I feel like I can counteract this slight upward opportunity that's indicated by the risk Z. You can see the bulls are getting stronger here in the in ADX, volatility starting to roll over more than one standard deviation above average. We've got a couple auto framers to look at. You can see the relative strength leaders and laggards here by these various populations. Inside the Dow, we've got a boatload of dojis. We have a 3 overreaction signal short swing signals. We have 3 symbols that test out better than 2 to 1 on the one-day auto framer based on reward to risk. These symbols in green are the daily percent winners today. Those in red are the losers. We've got a couple frog candidates here that test out at 3.3 on the frog box. We have nothing firing on the RSI2. So we have a couple symbols that we can stalk. We're still in the middle of this bear volatile, and right now we're concentrating on getting the indexes correct, the volatility trade correct, and then a few things that may work to our advantage. Verizon is really nice here. I just want to show you that all these green lines means that it is exceptionally powerful compared to all the other members of the Dow. And the fact that its NDX is above 100, meaning today was a large breakout on a 10-day, 1 month, and 3 month trading band. So Verizon is definitely worth attention for continued follow through, as are Walmart and Nike. Walmart especially looking strong. This one, AXP, is of interest here because we've been tracking that one. It's been punished lately, but it was an outsized performer today, so that could be almost like a bounce off the bottom. And then if the market fails and AXP is failing, then we can get short with confidence. But it's also postured for large one-day dead cat bounces, so it makes it an interesting intraday trade. ETFs, the same thing as the Dow, only just a couple dojis, one channeling signal in the VIX, a handful of these overreaction short signals, triple screen in the VIX, and the VIX tests out at 4 to 1 reward to risk ratio. Oil, energy, and blended commodities were down large today. The big winner was Latin America at plus 9%, and Brazil at plus 9%, and XIV, the inverse volatility, at 9.7%. So some possibility for intraday movement there. Last, these are the symbols that test out well on the auto framer. So if we buy above yesterday's high with a stop below yesterday's low, target the 10-day high as our reward. These are ones that test out at better than 4 to 1. American Express, the VIX, and IBM. The regression line fractal framework is a story for another day. And tune in and get a hold of us if you'd like to hear more about our techniques for identifying relative strength leaders and laggards. So lots of things to look at for tomorrow. Some good trades lining up nicely. Looking for continued momentum on the long side. Cautiously optimistic. We're prepared with our targets on the short side if the market resumes its volatile bear move. So we have no directional bias, but we have preferences if we see price beginning to move sharply in one direction or the other. So this is Ken Law from Tortoise Capital. Thanks for your kind attention, and keep your risk measured and your powder dry.